Hey everyone. Apple's stock price has had an interesting year in 2023, a surprising year for me because the stock price is up 51.7% year to date as of this recording, but the performance of the company's underlying revenue and profitability has not been strong. So it's been a tale of two stories here for Apple and Apple stock investors. While they've seen revenue and profitability come down, they've also seen the price go up. So what does that mean for 2024? Is Apple stock a buy going into 2024? Well, let's look at some of Apple's most vital financial metrics to answer precisely that question.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned that Apple's stock price is up 51.7% year to date in 2023. But if I show you the company's revenue and profitability, you'll notice that for the 12 months that ended September 30th, total net sales for Apple fell from 394.3 billion down to 383.2 billion. So an 11 billion decrease in total net sales at Apple. That led to operating income falling from 119.4 billion down to 114.3 billion, and over $5 billion decrease in operating income. So there was a disconnect between Apple's performance and the stock price. I typically don't like to see that, especially in this direction. That makes the stock look more expensive than it is because you're paying for a company on the decline. Now, next year, things are expected to improve. Let me show you. So the consensus expected revenue growth for Apple in fiscal year 2024, that's going to end in September 2024, is for revenue to grow by 3.5%. And that's going to lead to earnings per share growth of 7.1%. So analysts expect Apple to return to growth in 2024, albeit modestly. And the year after that, 2025, that growth is expected to increase to 5.6%, with earnings per share growth of near 9%. And 2026, it's expected to accelerate further to 6.9%, with earnings per share growing by 9.6%. So analysts are saying that this year was an outlier for Apple. This year was a year of decline, but Apple is expected to return to growth in 2024 and beyond. And that's a reasonable estimate to make because going back a decade, you can see Apple has persistently grown, even though it has had moments where revenue has came back, right? Let's look back going to 2014. Revenue exploded higher and then came down for a bit. Revenue exploded higher, came down for a bit. Revenue exploded higher, and now it's coming down for a bit, and analysts expect Apple to return to growth over the next couple of years. 383 billion in revenue over the trailing 12 months compared to roughly 170 million in 2014. Now, Apple has been able to do this through demonstrated innovation. The company has the skill in-house, the capability to continuously innovate. It started with, well, I shouldn't say it started, but it exploded with the iPhone, right? That really put Apple in a whole nother level. And it's now in like its 16th iteration of the iPhone, right? It keeps incrementally upgrading that product that keeps consumers engaged. But on top of that, it's built a nice ecosystem around the iPhone. The Apple Music, the services, the App Store. Now you've got the AirPods, you've got the Apple Watch. All of these are complementing the iPhone, making it more attractive to consumers, and all the while entrenching consumers within Apple's ecosystem, making it hard for them to choose another product when it comes time to upgrade or choose a new phone. And that's led Apple to grow so nicely over the decades, and it continues to innovate. And that's what investors should primarily be focused on with Apple, is their skill in innovation, their ability to create new products that they can sell at premium prices that consumers are willing to spend billions of dollars buying. That's the key with Apple. Now, for dividend stock investors, Apple does pay a dividend, although it is a modest dividend, 0.48% dividend yield. I wouldn't be surprised, however, if you buy Apple stock today and hold it for like 10 years, if your dividend per share is much, much higher 10 years from now than it is today. I think with all the cash flow that Apple is generating and the fewer and fewer opportunities to invest that cash flow, it's hard to spend the nearly 80 100 billion dollars that Apple is generating in cash flow. It's hard to find opportunities to invest that in growth. So more and more so, I think Apple's going to have to increase its dividend and increase the buybacks, because it's got to return that money to shareholders. It doesn't want to just hold on to it. That will lower its return on assets and all of the other things. Investors typically don't like companies sitting on a pile of cash. If they don't have a use for it, they want that cash to be returned so that investors can use it and allocate it elsewhere. I mentioned Apple sells its products at premium prices, 29.82% operating profit margin in the trailing 12-month period. And there's been wild fluctuations within this metric, above 30% at certain points and all the way down to 25% at one point, but above 24% for the better part of the last decade. And this will continue to swing up and down. The company goes through these upgrade cycles with iPhones, right? Because when people buy an iPhone, they typically hold on to it for a couple of years, and that's the primary driver of revenue and profitability for the company. So it's in a cyclical business, right? Every few years, there's that big upgrade cycle, and people buy those iPhones, and that helps boost revenue and profitability. And then that whole cycle plays out again until there's another innovative product that comes in and juices up sales and profitability, and then up and down it goes. So it is a cyclical business. Investors should understand that, but it's still a lucrative business generating strong profitability. And much of those sales turn into cash flow. Apple's done a good job turning these sales into cash flow, 28.84% sales turning into cash flow from operations. That's a very strong metric for a company that is still primarily a hardware company. The services segment is growing. Let me show you that. So the services segment in the last year, where I showed you overall revenue decreased to 298 billion, the services side of the business increased from 78 billion to 85 billion. So more and more so, the services part of the business is going to grow to and capture a larger share of the company's overall revenue. And that's good news, because the services segment is significantly more profitable than the hardware segments. Look at the product segment. 298 billion in revenue and 189 billion in costs, whereas the services segment, 85 billion in revenue and only 24 billion in costs, a fraction of the costs of the business. Overall, the services segment has operated at about a 70% gross profit margin, where the hardware side of the business has operated at a 35% profit margin gross. And so as services grows to take a larger part of the business, that can lift profitability and cash flow longer term. And finally, I wanted to look at valuation. Apple stock is trading at a forward price to earnings of 27.69, on the slightly expensive side for Apple stock going back to January of 2021. You've been able to buy this stock at a PE of less than 20, while at times it was trading at a PE of above 32 or so. But you're buying it right now if you were to buy it on the more expensive side. So given all of these things we've looked at, if I was to say if Apple stock is a buy for 2024, I would say yes, it's a buy, but it just barely makes the cut for my recommendation on being a buy. And mostly due to the valuation coupled with the pedestrian growth expectations over the next 3 years. Those two, it's just enough for me to recommend the stock as a buy. It's not a place where I'm saying, oh, this stock is a strong buy, let's pound the table, let's buy as much as we can. I'm not saying that, but I can say that the stock is a buy because of its excellent performance, its innovative capability, the turnaround in revenue growth accelerating over the next few years, and a reasonable valuation, even though it's on slightly the more expensive side. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.